Hey everybody, good to be with you today. My name is Brent Moores. I'm sitting in for Ben Watson today. He's out this week. I think he'll be back next week. But glad to be here. Talk about cryptocurrency basics here today. And we'll look at crypto in general. We'll look at some specific stocks as well. I'm joined in the chat by Scott Thompson. Appreciate Scott helping me out there. So as you have questions, feel free to type those questions into the chat, and between Scott and myself, we'll do our best to get to those. And just keep in mind, this is a series that we're doing here. And we've gone through kind of a four-step process in this. I'm going to get to those disclosures in just one sec, but there's a four-step process that we've done in the past. I'm not going to use that process. We're not going to go through the individual sections today, but if you're interested in those, what you can do is you can go back to the playlist, and we have that four-step process of what is cryptocurrency, how does it work, the basics here on cryptocurrency. So just check out that playlist. It's posted in the chat. Scott posted that. And then also, if you're watching on a recording, hey, you just go to the Trader Talks channel, go to the playlist, look at the playlist, and you can see them for this webcast. Okay? All right. Hey, I'm glad you're here. The material today, though, is intended for general informational and educational purposes only. It's not individual recommendation or personalized investment advice. All right. Schwab does not recommend the use of technical analysis as a sole means of investment research. Past performance is no guarantee of future results. Investing involves risks, including loss of principal. And there you go. And just keep in mind, digital currencies, such as Bitcoin, are highly volatile and not backed by any central bank or government. And cryptocurrency related products carry a substantial level of risk and are not suitable for all investors. And these are kind of newer type investments, a little bit more on the speculative end of things. So just keep that in mind. And when you're deciding how much money in your portfolio to allocate to these trades, consider your risk there on that. And these products are not protected by the SIPC, and they're not insured by the FDIC as well. Paper money software application, which we're going to be looking at, is provided for educational purposes only. With stop limit orders, well, put it this way. There's no guarantee of an execution of a stop order that it's going to be at or near the stop price. Stop limit orders, you risk missing the market altogether. And a trailing stop will not guarantee execution at or near the activation price. What we're going to be doing here is we're going to go for a half hour today here. So just keep in mind, this is a little bit of a shorter session. So let's hop to it. Let's get to it. This is the chart of Bitcoin futures, everybody. We're not talking about trading the future itself. We're just using this as a way of looking at the price on Bitcoin. And if you look at other crypto futures, such as Solana futures, big jump up, Ethereum futures, big jump up. So kind of the same thing could be said for all of these, to be honest, when we're talking about Bitcoin. We had potentially a resistance there we were looking at. We shot up straight through that. What happened? Well, right here, right at that point, the Treasury Department announced that they're going to increase their buybacks in the future. Okay. What did this do? Well, number one, it temporarily, now if we look at the yields, they fell a little bit for about a day, but they've mostly actually come back up since that point. But that seemed to be the triggering event here on this. And sometimes, like a chemical reaction, so to speak, you just need one crystal to form and it triggers things. So what we've seen is, even though if you look at yields have actually just kind of come back up, that crypto used that as kind of an inciting event and it shot up. Now, what's going to happen? That's I don't know if that's going to continue up or not, but that is sometimes what happens is this will go up, and at some point the fuel, so to speak, will peter out. Is it possible that we see some resistance up about that level? That wouldn't surprise me just from a technical standpoint. That seems like a likely level of resistance there. Now let's couple what happened with the Treasury with a few other things. Number one, on the same day, I think, President Trump gathered crypto executives and federal regulators and at a press conference, and he's trying to push this Clarity Act. Now I've checked on the prediction market sites and stuff. Most people don't seem to think that Clarity Act is going to pass in 2026. I have no special expertise on that, so I can't tell you whether it's going to or not. But that is something that kind of coincided with that. Increased passage of that could help prop up Bitcoin and other cryptocurrencies. But another thing, what happened is when the Treasury buyback was announced, what happened was that helps to weaken the dollar. Here is the dollar. We've seen a weakening of the dollar. And what happens is when people look at Bitcoin or cryptocurrencies, hey, look, this could be considered kind of a dollar hedge. Crypto could be considered kind of a dollar hedge. And so that also tends to spur that going. Now, one other thing I would mention here. Sometimes when you have an asset, and this is obviously a big asset class, a lot of people trading Bitcoin, when it starts to go up in this kind of parabolic, huge fashion, you end up with something that's called like a short squeeze, okay? A short squeeze. And what that means is people who are short Bitcoin, in other words, they're bearish on Bitcoin, they can kind of start to panic and they cover their position and then they end up buying their position. And so that adds more buying pressure on that. Now, those peter out at some point. Again, this potentially could be a resistance level up here. Maybe it doesn't even get there. Who knows? You can see where our RSI is. That's kind of our overbought level when we go above 70 on that RSI. Doesn't mean it's immediately going to turn around. It can continue to go up. All right. So there we go. Now, so that's the Bitcoin future chart. If you look at Bitcoin spot, kind of looks pretty similar, doesn't it? I think percentage-wise, it hasn't gone quite up as much as the future, but the chart really doesn't look that different. If I'm looking for a resistance level on that, again, I'd kind of say my line's going to be a little crooked. I apologize on my drawing ability there, but somewhere up there is potentially a resistance level on that. Right now, though, the interesting thing is if you look at this, it kind of went up, had a mini flag. Some people may call that a flag, maybe not. It's pretty short term, but then it seems to be resuming itself back up a couple percent today. All right, so that's that. Now, there's a lot of different approaches you can take to this, and how individual crypto stocks are reacting kind of depends on the type of stock and what they're doing. There's crypto miners out there like Mara, and you can see crypto miners have benefited. Here's Mara. It's gone up. Mara has remained mostly, they're the largest crypto miner, and you can see the strong reaction in the stock. It's gone up. A lot of kind of more traditional crypto miners, such as Core Scientific, where's the bounce? Well, you know what? They've shifted a lot of their operations from crypto to this, AI infrastructure type thing. That's true for Core Scientific. That's true for Cipher Digital, for example. And so a lot of these just haven't reacted positively. Now, last week we put on a trade on Riot. Okay, this is another one that kind of falls into that space. And we got in it, and let me just zoom in a little bit here. We got in it hoping for it to bounce here, and what did it do? It actually fell down. We had a stop about 18, so it picked it. When you do a stop loss, this is one of the dangers of a stop loss. I mean, this is one of the things that happens. You agree to get out at $18, and the low on this was 17.86. It picked us off, and then it went up. So, that's just one of the dangers of a stop loss. Another danger of a stop loss is you just don't know what price it's going to fill at. And so let's say we had that $18 stop loss and this gap down to $16. We weren't going to get out at 18. We would get out probably closer to 16 at that point, I would guess, here on that. So that's how that works. Now, other companies, let's think about other companies in that crypto space. So we mentioned miners. Here's another miner, Hut 8, that has shifted a lot from actually mining crypto. But there's companies such as Coinbase. Coinbase has shot up. Look familiar? This looks a little bit like the Bitcoin chart, right? So if you're looking for bullish to take advantage of this, you could look at something such as this. Now, Coinbase is the largest crypto exchange platform out there. And so you see a jump in that. But there's a couple others I want to look at here. Okay, here's Galaxy Financial. This is kind of crypto financial services. It's gone up and it's starting to pull back down a little bit. It had a nice run, but it's pulling back down a little bit. So one approach on this is to say, hey, look, bullish, perhaps you're longer term bullish on crypto, but you think, hey, this may pull back a little bit. I'd like to get this. It's likely to pull back maybe to where we were before. And I'm interested in buying down here, okay? I think it may still have some negative momentum. We could put in a trade down here to buy it if it dips down there, and then we'd have a position, and then presumably, if we're bullish and if the stock cooperates, we bounce at some point, and then it goes up, and we have some shares cheaper than where it is right now, okay? So that's one possible approach to doing this, and I want to show you how to do that trade. There's another approach you can use, and we'll do that on some different stocks, on ones that still are going up. And an example of that, well, there's some, like MicroStrategy, that's going up, going up, going up. We're still up 5% today. MicroStrategy is one of those companies that just holds a ton of, a lot of Bitcoin. And I'm going to show you another one here in just a little bit before we do that. But for now, I want to show you how to do that trade if you think this is pulling back and is going to hit a level and you're interested in buying, but not yet. So what I'm going to say is this, what if we say, if this dips down down to this level, I want to buy it here. So what you could say is, look, if it goes below 22 bucks, I want to put in an order to buy. How do I do that trade? Well, that's a buy limit order. In other words, if I say, I want to buy this and I don't want to pay more than $22, okay, $22, I could put in a limit price on that. And if I put in a $22 limit price right now, the stock's at $23.40, then it's not going to buy it right now because nobody's going to sell it to me for 22 bucks if the current price is $23.41, okay? But over time, if this dips, I can just kind of put this in and wait and see if we dip down and hit that price. And then if we do hit that price and buy, we could even enter say, look, I'm going to get in if it gets down here, but if it keeps going down and drops below 20, say, I want to put a stop on that and get out. So how can we do that? Well, here's how we do that. We're going to take our cursor, and you can do this on the trade tab as well, or you can just right click right here. And let me just jot down a couple prices so I don't forget. We said if we go to 22, that's going to be where we're going to enter, and we're going to do a stop at 20. Now notice this is a very different trade than if we said, I want to wait for this to bounce up and I only want to get in if it goes above, I don't know, 24 or something like that. I can do that too. What kind of trade is that? That is a buy stop order. So I want you to understand the distinction between these, because this doesn't just apply to crypto stocks, crypto related stocks. This applies to all stocks. Okay. So the distinction, and at the risk of repetition here, but I think this is very, very important. The buy stop order tells us we're only going to go in if the stock goes above a certain price. So if we're waiting for it to bounce and go up above this level, we'd use a stop level. So in this example, let's say we did $25 stop, okay? Buy stop. A lot of you are used to stop losses as an exit strategy, sell stops. A buy limit order is saying very different. It's saying, I'm only going to get in if the stock drops below a certain price. Now, there's pros and cons to both of these. The buy stop order, I'm buying at a higher price. Well, that kind of stinks in a way because I'd rather buy something cheaper than more expensive. But the good news of that is we know at that point the stock's going up and it has upward momentum. The buy limit order, we're buying at a cheaper price. We're buying at 22, not at 23 and a half. Well, that's great, but the stock's dropping at that point. So we probably want that when it hits an area that we'd say is maybe an area of resistance, or not resistance, support down there. That would be the reason for that. So I want to just demonstrate that trade here, and then we'll move on. I'm going to right click on this. I'm going to buy custom with a stop. Now here's my buy. Let me get rid of this column here. Okay. Make sure you have your quantity. It's 100 shares. Understand how much you're willing to pay for this. Okay. Stock's around 23 bucks right now. Okay. Now, it's a limit price. We said we're willing to buy this at 22 bucks, $22. Okay. And I'm going to make this to good till cancel. In other words, I don't want it to expire at the end of the day today. I want this to be able to go on in the future. So this, how much would this cost me? Well, 100 times 22 is 2,200 bucks, approximately. There you go. That's that. And so that's the buy order, and make sure that makes sense to you in terms of prices. Now, what about the stop? We said we were going to get out around 20 bucks. Now, some people don't like to put that stop at a round number, so they'll go, well, I'm going to get out at, 1995 or something like that. You can do that if you like. Stop, that's going to be good till canceled as well. This stop order only becomes active if the initial order fills. Okay? So there's that order. I'm going to confirm and send, and then I'm going to send that order. Okay, so there's that one order. I want to show you a different type of order though here as well. And that is this, kind of a different forecast. Here's Strive, okay? What's Strive? Strive is one of those companies that just hold a lot of Bitcoin, kind of like Strategy in that regard, okay? And you can see the move, this kind of meteoric move in Strive. Well, Strive has, I wrote it down. Let me just see if I can figure that out. Strive owns 21,356 Bitcoin. Okay, I got that from the internet. I don't know, that could have changed since then, so I don't guarantee that number, but 21,300 Bitcoin times Bitcoin's price, that's a fair amount, and hence why this is going up so much. But this brings up a larger discussion of not just crypto stocks, but of any stock when you're looking at it, and it kind of goes on this meteoric rise. A lot of times you're put in this conundrum, so to speak. Hey, I want to get in, but it's going up so fast. I'm worried when things go up that fast, they can go down pretty quickly too. Is it too late to get in? It's a valid question. And it's one that I've dealt with in the past. I think Scott has dealt with in the past. And if you've been trading in the markets a while, you've probably dealt with in the past too. So obviously there's different ways to do this. One is to wait for a pullback and try and get in on a pullback. But if you don't want to wait for the pullback, I mean, we're up 10% today. This is continuing to go up. This may represent the very peak, but it may not. Maybe it goes up a few more days. So one approach to do it is to buy now and then, but put in a really tight stop, okay? And say, let's say we put our stop right here. And that way, if it continues to go up, we're gonna participate in that move up. But if it comes down, hopefully we'll get out near our stop price. Again, not guaranteed. Okay, I already gone through that. Now, if we used that strategy in the past and said, well, I'm going to put it at halfway the previous candle or something like that. Well, the next day it would have gone, well, halfway it would have worked out beautifully for us. If you do this, typically what traders will do is they will move the stop up very commonly, very quickly, okay? Daily, maybe even intraday perhaps if it's moved up quickly enough, but moving it up a lot. The other alternative is to use something called a trailing stop, okay? And what a trailing stop does is it moves the stop up and it moves it up behind the high price. As you hit new high prices, it keeps ratcheting the stop loss up. So let's say, for example, that we put a stop here and we say, well, I'm going to put the stop below, the one approach was below each day's low or something like that. And we said, well, we put the stop down here. Okay. All right. Fair enough. There's our stop. Well, another thing I could do is I could say, hey, the stock's at about 20 right now, right near its high. The low price on the day is $18.55. So basically it's $1.50. I'm just going to say $1.50 below the current price. I could put a trailing stop in at $1.50 below that price. And then if the stock goes up from 20 to 21, our stop would go up from, it would start out around 18.50 and it would move up dollar for dollar behind that. Okay. You can go tighter on that. We could put our trailing stop halfway up the candle. Okay. About 19.50. Well, that's about what? 70 cents below this price. If we do that, that's a very tight trail stop. That's okay, but don't expect to be in the trade very long. That's about a 70-cent trailing stop. Now, you could put the trailing stop in the form of a percentage or a dollar amount. Doesn't matter. And I'll show you how to do that. Okay. So here's what we're going to do. We're going to look to get in right away. And I'm going to put my trailing stop about 70 cents below. Okay. About halfway up the candle there. So here's how we're going to do it. Again, this is a highly speculative trade. I'm not planning on being in it very long. I'm going to do a similar thing. I'm going to buy custom with a stop. Okay. And I'm going to get in right away. I'm just going to put that in as a market order. I'm going to change my stop to a trail stop. And it says minus 10 cents. I'll make that good till canceled, by the way. I don't want 10 cents. I wanted that to be 70 cents. Now, 70 cents on a lot of stocks that are $20 stocks may be, maybe not super tight, but that's really tight on a stock that's this volatile. It's up $1.87 today. So is this trade going to be around in a week? Probably not, but it's a way of doing this. Now, trailing stops, like regular stops, if it goes down and hits that level, it turns to a market order. And so it doesn't guarantee it's going to get us out exactly at that price, but that's how you do the trade. Again, make sure you figure out the dollar value of the overall, what you're willing to risk. A $20 stock, 100 shares of that is going to be about a $2,000 purchase. So what I'm going to do is I'm going to send that order. Okay. I'm going to send that order and we'll get that in. So we got that trail stop and you can see that kind of visually where it is on the page. If this stock goes up, we'd see the trail stop kind of gradually move up behind it. Now, if the stock goes down, is the trail stop going to move down as it goes down? No. Otherwise, it would never trigger, right? If the trail stop always trailed below it, if the stock went down, it would never trigger. So but it goes up if this moves up. So that's a little bit more of probably a shorter term trade. So look, we talked today we looked at a variety of charts, some that are participating fully, it seems, in that move that we've seen in Bitcoin, this kind of meteoric move in Bitcoin, including our last example trade, which was Strive, ASST. And so that's one approach to do it, is try and take advantage of the momentum. The other approach is like we did on Galaxy, where we said, it's kind of petering out here. We're going to put in a buy limit order to buy that. And we also mentioned another approach, which we didn't actually do the trade, and that is to do a buy stop order and only to get in if the stock continues to go up. But there's a variety of these crypto stocks. Some of them react very closely with what the underlying, Bitcoin price is, and we showed Ethereum price is doing about the same thing, and Solana price is doing about the same thing. Some of them trade very closely to the cryptocurrency, and some don't. But there you go. Okay, I'm hoping that's helpful for you, everybody. I appreciate you all joining me today. Make sure you subscribe to that Trader Talks channel. We talk about cryptocurrency on this channel. We talk about stock trading, shorter term stock trading, longer term investing. We talk about options. We talk about futures. All you got to do is just subscribe so you don't miss it. If you like the webcast, though, I do have a favor to ask of you. And that is, if you like the webcast, click the thumbs up, click the like button at the bottom of the page. Does me a favor, does the channel a favor, and it's just, we appreciate you. But keep in mind, whether you click that like or not, we appreciate you joining me today. And I think Ben's back next week, but you'll see me in the future some here on this webcast. And I hope you all have a wonderful rest of your day. Just keep in mind, coming up next, we got trading a smaller account. Barb Armstrong teaches that webcast. And hey, have a great week ahead, everybody. Bye-bye.